The South African property market is still undergoing a transformation shaped by inflationary pressures and evolving consumer needs. Role players in the industry are optimistic, though, about the near-term outlook as the industry approaches the dawn of 2024 with a repo rate that has held steady, providing much relief to South Africans. Brad Bendall from BetterBond speaks to us now. Thank you so much for your time, Brad. At least there's optimism. Talk to us about this near-term outlook that we are anticipating.
Morning, Tumisang. We certainly are more optimistic than we were 6 months ago, but one has to remember that the interest rate hike has a lag effect, and certainly the interest rate hike cycle that we've been through has been quite severe and is still playing itself out in the market. The fact that the MPC has held the interest rate steady for the last two meetings has been hugely positive, but the reality is that that doesn't play out in the world of the consumer. What it does do is it gives us hope that the interest rate cycle has topped out, and we will start to see interest rates start reducing in the second and third quarter of 2024.
Many of us as consumers are crossing fingers, Brad, for that eventuality of at least a cut in interest rates. But having referenced the lag in terms of an impact with regards to the repo rate having increased so rapidly, where do we sit in terms of describing the South African mortgage dispensation, especially the affordability side of things?
Look, I mean, the affordability is still an issue, and we're still under pressure in that regard. I think, for most homeowners, they've come under immense pressure over the last 2 years with these interest rate hikes. And one must remember we've come off a 7% interest rate up, and now we're sitting at 11.75. So that's a significant increase, and something that the consumers have had to deal with, in conjunction with inflation, fuel prices, general cost of living. So generally the market's under massive pressure, and we've seen that in the numbers over certainly the last year. So as I say, I mean, we really are hoping that the Reserve Bank will see fit to start reducing interest rates, provided that inflation stays within the target market, sorry.
Yeah. How much of this, though, has changed the dynamics of the property sector? There have been pockets of green shoots at the same time, though, for first-time home buyers that bought at a time when the repo rate was at its lowest. It's become difficult to maintain some of those mortgages, and it then creates a very different picture for home ownership in South Africa and the trends there.
Yeah, I mean, we've seen various trends, various new trends popping up, Tumisang. We've seen generational living, which means that you have 2 or 3 generations of a family living in the same home. And obviously that saves costs. It's not, to be honest with you, it's not something new, but it's certainly that trend has increased. And we've also seen people moving into smaller towns in South Africa, so decentralizing in a sense, because the prices of homes are so expensive. We've also seen, as a result, the rental market has shot through the roof, because people just simply can't afford to purchase. So, yes, there are green shoots. There are always opportunities for first-time home buyers. And by the way, that makes up 60% of all home loan applications is first-time home buyers. And there's always opportunity, and the market always presents new ways of owning a home in these times. And yeah, I think as a first-time home buyer, one just has to be cautious in terms of how you go about that first purchase and where you purchase.
Lastly, Brad, based on that, much of the questioning around the repo rate and lending rate and mortgage and home ownership has been, do you then fix the rate at this point, or do you wait it out before you even get into the property market at this stage?
Yeah, that's a really good question, and I think our advice would be not to fix. Remember that when you fix your rate, you don't get the prime rate, so you wouldn't get 11.75. You would get a rate higher than that, depending on which institution you engage with. But the fixing of rates is always a little bit of a gamble, because you don't really know where it's going to go unless it's been stable for many months, which obviously we know it hasn't been. And all indications are that we've reached the top of the cycle. We've had 2 MPC meetings where they've held tight now, and they've kept the rate steady. So, all things being equal, we should see the interest rate decreasing, and therefore it would not make sense to fix your interest rate at all.
We wait for those better days. Brad Bendall from BetterBond this morning speaking to us on the business desk about the near-term outlook in the property market given the elevated interest rates, but there's positivity with regards to maybe there'll be cuts come 2024.